So now I think everything is okay. Thank you for notifying me that we had an issue with the sound. So it's another perfect afternoon, guys of CPA. We meet again for this session. So this is your online tutor, CPA Dinochoy. For today, we are going to look at advanced financial reporting, and more so, I will be looking at consolidation of foreign subsidiaries. So the consolidation of the foreign subsidiaries. So looking at this consolidation of foreign subsidiaries, I will be doing the question for December 2023, question 2. December 2023, question 2. So foreign subsidiaries. So whereby you find that there is a parent company which has a subsidiary. Let's say the parent is in Kenya, the subsidiary is in the USA. So remember that the parent company, it will be having a reporting currency, which is Kenyan shillings. Then we have a subsidiary, which has a currency, which is in dollar. So in the process of consolidation, these parents must do what? Must remember consolidate the subsidiary, but this subsidiary must be, the operations of the subsidiary must be done what? Must be translated from the dollar to Kenyan shillings. So how would I be able to do that? So we have various items to be translated. We have items like incomes and expenses, assets and liabilities, dividends, equity and reserves, and we have the aspect of depreciation. So when talking about incomes and expenses, we use the average rate. When we talk about assets and liabilities, we use the closing rate. When we talk about dividends, we use the spot rate. For the equities and reserves, we use the historical rate. Then for depreciation, use the rate which was used in the respective asset. The rate which was used to translate the respective asset, which has been done what? Depreciated. And this method of doing this translation is called the presentation currency method. So the relevant method here we are using is the presentation currency method. Presentation currency method. That is the one which allows the translation of the items of subsidiaries which are independent in nature. The subsidiaries which are independent in nature. So when doing that, you use these rates. So for the average, you will be given, but for you to determine the closing rate, this is the rate which was prevailing as at the date of the balance sheet, as at the date when we are preparing the balance sheet. For the spot rate, is the rate which was prevailing as at the date, as at the date of occurrence of that relevant transaction. Then for the historical rate, is the rate which is prevailing as at the date when the subsidiary was acquired. Then now for this one, it's self-explanatory that I use the rate which was used to translate the respective asset. That is for depreciation. So we can go direct to that question, the December 2023 question 2. December 2023 question 2. So for the December 2023 question 2, it says that H Limited, a public limited company whose financial currency is Kenyan shillings, operates in the digital economy sector. The company has recently diversified its operation by acquiring shares in a foreign entity, S Limited. The functional currency of S is a krona. The following statement of financial position were extracted from the financial records of the two companies as at 30 September 2023. So you have the statement, you have the relevant statement there. So this is the statement. So for H Limited and S Limited. So remember that these operations of S Limited, the operations of S are in a foreign currency called a krona. So we have to do what? We have to translate these to the reporting currency, which is Kenyan shillings, in the process of consolidation. So additional information, number one, on 1st October 2022, H Limited acquired an 80% controlling interest in S for a cash consideration of Kenyan shillings 3 million, when the retained earnings of S stood at krona 540. So the fair value of the identifiable net assets of S were krona 2,700 million. The excess of the fair value over the carrying value was due to an increase in value of plant, whose remaining economic useful life approximated 5 years as at acquisition. Number two, H Limited uses the fair value method to measure the non-controlling interest in subsidiaries. The fair value of the non-controlling interest in S on 1st October 2022 amounted to krona 900 million. Number three, on 1st October 2022, H exported goods worth 180 million on account to S. These transactions has been recorded by both entities. However, the account payable is still recorded at the rate of exchange that prevailed as at the date of the transaction in the financial statements of S Limited. All of these goods had been sold to third parties by S Limited as at 30th September 2023. Goodwill arising on acquisition of S had not been impaired since acquisition. Then you are given the foreign exchange rates, number 5. And number 6, S had not issued any ordinary shares since the date of acquisition. So the examiner needs you to do two things. Goodwill. So remember that December 2023, question 2, advanced financial reporting. So the first thing the examiner needs you to do is the computation of goodwill. The examiner needs you to do goodwill arising on acquisition of S in Kenyan shillings. So goodwill, you know that it's purchase consideration. You deduct what? Minus share of net assets, acquired. So the purchase consideration minus the share of net assets acquired. So, but now the examiner needs you to do the goodwill of that relevant subsidiary, which is in krona. So the currency is in krona, but now he needs you to do in millions. So you can write krona, then I will be able to write the rate, then I will be able to get Kenyan shillings. Kenyan shillings. So purchase consideration. So the purchase consideration in krona when this subsidiary was acquired. So if you check your question well, you are told that number one, on 1st October 2022, H Limited acquired 80% controlling interest in S for a cash consideration of Kenyan shillings. Of Kenyan shillings what? Of Kenyan shillings, that is 3,000. So 3,000 Kenyan shillings. So if I change it to krona, so as at the time of acquisition, the rate was, so this one is in Kenyan shillings. So as at the date of acquisition is 1st October 2022. So as at 1st October 2022, according to note 5, the rate is 0.9. So 0.90 krona is equals to 1 Kenyan shillings. What about these 3,000 Kenyan shillings? I need this value in krona. So I will multiply it with 0.90. So this is 2,700 krona. The rate is 0.9. We have used to translate this. So Kenyan shillings is 3,000. So that is the purchase consideration. So remember that. Which method am I using to compute the goodwill of S? I'm using the full method. Why? Because already in this question of ours, in additional information number 2, you are told that H Limited uses the fair value method to measure the non-controlling interest in subsidiaries. it uses the fair value method. So when the non-controlling interest is measured at fair value, that is full method which is applied. So for the guys who have joined, the 11 guys who are watching this live session, kindly what I can request is that the first thing, if you have not subscribed to the channel, you subscribe. And at the same time, kindly share the link for this live session to other accounting platforms. So let's continue. We are doing the question for December 2023 Advanced Financial Reporting. It's a unit in CPA, the one which is accounting course offered by which accounting body, cast name. So I was talking about goodwill, which is purchase consideration minus share of net assets acquired. We are computing the goodwill of S, which is a foreign subsidiary. So we have started with purchase consideration. But remember, the method I'm using to compute for this goodwill of this foreign subsidiary is full method. Because in note 2, you are told that the fair value method, H uses fair value method to measure the non-controlling interest. And the fair value of the non-controlling interest in S on 1st October, it was amounting to 900 krona. So you add that. Fair value of NCI, the fair value of non-controlling interest. So that is 900 krona, the 900. So in Kenyan shillings, so we have to use the rate as at the time of acquisition. Remember here I'm using the rate as acquisition date. Because when computing goodwill, we are computing goodwill as at the time the subsidiary was done what? Acquired. So changing to krona, changing to Kenyan shilling, sorry, because this was krona. So we know the rate is 0.9 krona is equals to 1 Kenyan shillings. What about the 900 krona? So you will be able to divide. So if I will take 900 krona divided by 0.9, I will be able to get 1,000 Kenyan shillings. So that one you add. So the full method. So this one is 2,700 plus 2,700 plus 900. That is 3,600. Then this is 4,000. Then now you deduct what? Net assets. Res net assets. You raise the net assets of S. So the net assets of S. So net assets. So net assets were provided as at the time of acquisition already. That is according to note 1. So remember that according to note 1, you were told that yes, H acquired S. You were given consideration in Kenyan shillings when the retained earnings of S stood at 540. The fair value of identifiable net assets of S were 2,700. So fair value of net assets as acquisition, fair value of net assets, 27. So if we translate to Kenyan shillings, again we use the rate as at acquisition. So you divide 2,700 divided by 0.9. So 2,700 divide 0.9. So we get 3,000. We are getting 3,000. So this one you deduct. So you deduct. So we can be able to get goodwill there. Which value? So goodwill, the value for goodwill here is, so 3,600 minus 2,700. So that is 900. So the goodwill we have here is 900. So goodwill being 900. So for this one is 1,000 in Kenyan shillings. So they are 1,000. So they needed goodwill, and that is what we have done. That is the first requirement. The value of goodwill arising on acquisition of S in Kenyan shillings. That is what we have done here. So this column addresses the aspect of in Kenyan shillings. So before I go to the second requirement, so remember that this is the goodwill as at which date? This is the goodwill as acquisition date. As acquisition date, which is okay. But now I need to get the goodwill as at the balance sheet date. I need to get the goodwill as at the balance sheet date. So how would I be able to get the goodwill as at the balance sheet date? So what I will be doing here, remember that I will have to determine the goodwill, this one, as at what? As at the closing date, as at the balance sheet date. So of which, once we'll be able to determine this goodwill, for now we have goodwill as at acquisition date. So I will be able to translate this 900 so that I will be able to determine the goodwill as at the closing date. Because for the translations I've been using here is the determination of the goodwill as at the time of acquisition, which is goodwill as acquisition date, same as opening goodwill, the opening goodwill. So I need to determine the goodwill as at the closing date, as at the date of the balance sheet, because that is what will appear in the statement of financial position. So doing that, I will be able to get an exchange gain or a loss. So I have to say exchange gain or loss. So there must be an exchange gain or loss. So the closing goodwill. Remember, I would have to pull this one down, 900. But now I would have to translate it so that I determine goodwill as at the closing date. So as at the closing date is as at the date of the balance sheet, which is 30th September 2023. And the 30th September 2023, the rate is 0.8, not 0.9. 0.8. So if I take 900 divide 0.8, I will be able to get 1125 in Kenyan shillings. Meaning that there is an increase from 1,000 to what? To 1125. So meaning that that is an exchange gain of 125. The balancing figure there. So we have an exchange gain of 125. So this exchange gain of 125 will be shared to the parent, and it will be shared to the parent and the NCI, because the parent never controlled this subsidiary 100%. The parent was controlling S up to 80%. So allocation of goodwill. So allocation of exchange gain, not a goodwill. Exchange, let's say reserve or gain. It's the same thing. Exchange reserve due to goodwill. So the 125. So to the parent, you say 80% of 125, and to the NCI will take 20%. 20% of what? Of 125. So out of the exchange gain, out of the exchange gain there, so 0.8 times 125. So this is 100, will go to the parent, and the balance of 25 will be attributable to the NCI. So these just are working, and this one will be important at some point. But for the goodwill, we were done at the earlier stage, at the point of 1,000. Remember that the first requirement, we were done at the point of getting 1,000. So what I've done here is just additional work, which will be able to assist us when we will be doing the second requirement, because those exchange again will be applicable somewhere. Because the goodwill we determined is the opening goodwill as at the date of acquisition. We need to know the goodwill as at the balance sheet date. That is why we had to translate this 900 as at the balance sheet date using 0.8. We got 1125. But the goodwill as at the date of acquisition, which is the opening goodwill, is 1,000. So meaning there is a gain of 125, the exchange gain. And this exchange gain must be shared to the parent and to the NCI. So let's go to the second requirement. They needed us to do what? The computation or the presentation of the statement of financial position, 14 marks. 14 marks. Good 14 marks. Very easier to get them because they needed only 7 correct entries during this exam. The examiner was in need of only 7 correct entries. The examiner was only in need of 7 correct entries, which can be scored here without any working. I can be able to tell you how to get this. So the first thing you need to do, you need to draw the structure and determine if this subsidiary was present for the full year or it existed for some months. So if I say that H acquired, it acquired just one company, S Limited. So it acquired this company on which period? According to note 1, you are told 1st October. So 1st October 2022. So our financial year ends when? Our financial year ends on 30th September 2023. So it starts on 1st October 2022. So and S, remember it was acquired here. So meaning that S Limited is a full year foreign subsidiary. Foreign subsidiary. That is the case. That is S Limited is a full year foreign subsidiary. So we can be able to do the presentation of that next words. Next requirement, statement of financial position. So the consolidated statement of financial position. Consolidated statement of financial position as at which period? As at the end of the year, 30th September 2023. So you need to be careful when consolidating these items. So you need to know that when consolidating assets and liabilities, use which rate? Closing rate. And the assets and liabilities we are translating is that of the foreign subsidiary. Our closing rate in this question is the rate of 0.8. When you will be translating equity, use historical. Equity and reserves, use historical rate. So historical rate is the rate which was prevailing as at the date when the subsidiary was acquired. 1st October 2022, 0.9. Maybe if there's any expense during the year, income or expenses during the year, that is income statement items. Income statement items. So income statement items use average rate. So the average rate here you are given is 0.75. 0.75. So H Limited consolidated statement of financial position as at 30th September 2023. So we have shillings now, Kenyan shillings to be more specific, because that is the reporting currency. So let's start with assets. Let's talk about assets. So for the assets, remember we start with non-current assets. So for the non-current assets, we have the property, plant and equipment, PPE. So parent plus subsidiary, 8,500 plus the subsidiary. But now subsidiary is in a foreign currency. So that is 3,000. I have to divide. So this is an asset. Use which rate? 0.8. So I will be able to divide 0.8. What am I supposed to add here if there was a revaluation? If there is a revaluation. Revaluation is the difference in assets. Which difference? Difference of fair value and carrying amount in the assets of the subsidiary. So if there is a difference in fair value and what? Carrying amount in the assets of S. Is there anything of that kind? So they talked about something of that kind in addition information number 1. We need to know that difference. Because they said that there's a sentence where they say the fair value of the identifiable net assets of S were 2,700 as at the date of acquisition. So remember that we can be doing in krona, which is okay. So krona. So the reported net assets, the value is 2,700. 2,700. They continued saying the excess of the fair value over the carrying values was due to increase in value of plants, whose remaining economic useful life approximated 5 years. So which difference is that? So we compare with the net book values. Net book values of the assets. So net book values of the net assets. Net book values of net assets. So if you look at the statement of financial position, we have ordinary share capital stated at what? 1560. We have share premium. Share premium is stated at 200. And then we have the retained earnings. The retained earnings, remember you use the one as acquisition as per note 1, it's 540. So adding these three, what are we getting there? The total. So 1560 plus 200 plus 540. So this is 2,300, meaning that the excess is 400. So this excess is a fair value uplift. Fair value uplift. But representing what? Plant. Representing plant. So this is 400 in krona. So that is the revaluation which we add. But remember, we have to translate it at 0.8. So that is the one we add. Then we deduct what? We deduct depreciation, because now once we have a fair value uplift, this value has not been subjected to depreciation, the value of 400. So we need to check depreciation. And the depreciation, we call it depreciation undercharge due to that revaluation. So the 400 divided by 0.8 times what? Times 1 over 5. Why? Because they said the remaining economic useful life is 5 years. So it's the same as saying 400 over 0.8 when translating over 5. So it's the same as 5 over 1, which is 400 over 0.8 times 1 over 5. The reciprocal. That is what I've done. So which answer am I getting here? So remember, this is the revaluation, this is the depreciation undercharge. So if I take 8,500 plus 3,000, you divide 0.8, the translation, plus 400, you divide 0.8 minus 400 divide 0.8 times 1 over 5. I'm getting 12,650. We are done with the property, plant, and equipment for this question. So remember the parent plus subsidiary, but this subsidiary must be translated at closing rate. The same way we have here a revaluation, which you have to translate. Then we have a depreciation undercharge based on the revaluation. So other adjustments which you could have done here is maybe if there was unrealized profit on fixed asset and the depreciation overcharge. You know the adjustments made for PPE based on the other questions I've done for consolidation. So that is the first thing we have done. The next thing is investment in S. Investment in S, you replace that one with goodwill. So goodwill of S as at the closing date. That is why we translated the goodwill of 1,000 to the what? To the closing date. So remember that we were getting goodwill of 1,000 as at the date of acquisition. But now, what about the goodwill as at the closing date, as at the balance sheet date? We did a translation for that. We got 1125, and exchange gain was 125. So The amount to be recorded there is all about the 1125. The goodwill as at what? Balance sheet date. Next is other intangible assets. Other intangible assets. So for the other intangible assets, remember that it's 1600 plus 510. We translate using closing rate at 0. What? 0. At 0.8. So 1600 plus 510. So this is 2237.5. We are done with non-current assets. You can get the total there. Total non-current assets. The next thing we talk about is current assets. You talk about current assets. So for the current assets, you start with inventory. So for the inventory, there's 2500 plus 1960. You translate this at 0.8, the closing rate. Then you make relevant adjustments, if any, like if there is any goods in transit, and if there was any unrealized profit on the goods sold. We don't have any based on that, because in Note 3, when they talked about hedge exporting goods to S, there's a last sentence. They said that all these goods had been sold to third parties by S. So there's no unrealized profit. There's no unrealized profit on those goods which were sold. So meaning that the 2500 plus 1960, you do what? You divide 0.8. So that is 4950. The next item is trade receivables. Trade receivables. So trade receivables, 2300 plus, so 2300 plus 1320 divided by 0.8. 0.8. But now remember they said in Note 3, on 1st October, H Limited exported goods worth 180 on account to S. This transaction has been recorded by both entities. However, the account payable is still doing what? Recorded at the rate of exchange that prevailed as at the date of the transaction in the financial statements of S. So the accounts payable is still recorded at the rate of exchange. At the rate of exchange. So what am I supposed to do with that 180? Was it still outstanding so that we eliminate? And how are we supposed to eliminate it? That is what you need to know. So the amount was still outstanding, because they said that the accounts payable is still recorded at the rate of exchange as at the prevailing, as that is at the rate of exchange that prevails as at the date of the transaction in the financial statements of S. So this amount must be eliminated from the books. It's not supposed to be outstanding again in the next periods. So I will be able to minus it here, 180. Then again, when I will be doing my payables, I will be able to deduct it. So I will credit the receivable. I will credit the receivable, then debit payable. So deduct under receivable, deduct under payables. So 2300 plus 1320, you translate it at the closing rate minus 180. So I'm getting 37 what? 3770. That is what I'm getting here. Then the next thing to be consolidated is cash and cash equivalent. Cash and cash equivalents. So the cash and cash equivalents, so this is more direct, 1650. 1650 plus 640, translated at closing rate So 1650 plus 640, you divide 0.8. So that is 2450. So meaning that we are done with the asset. You can even get the value of total asset, because there's nothing missing here. So you go to the equities and liabilities. So you go to the equities and liabilities. You talk about equity and liabilities. So starting with equity, so we have ordinary share capital. So ordinary share capital, you pick the value of the parent. So the value of the parent, that is 5,000. That is 5,000. Same with share premium. Pick the value of the parent. So the value of the parent for the share premium is again 2,000. Then after that, you go direct to other items which needs workings. But those workings will be done later. I will just mention them, then do the relevant workings later. But in an exam period, and a question of this kind, if I was a student, these workings right now, the next thing to be done here is retained earnings. I will not have time to do them. Retained earnings. So there's a working to be done for that. Other than retained earnings, remember that there is an exchange reserve. This is another working. Already we got one of the exchange reserve. Remember that there was an exchange of a 125 from Goodwill, exchange gain of 125, of which 80% was attributable to parent. So we have the one from Goodwill, so the 100. I would have to look for the other one from net assets so that I would be able to get the total. Then for another thing to be introduced here is non-controlling interest. So that is another working. So these are the only three workings remaining. Then we'll be done with the question. Up to that point, we have total equity. After total equity, I have to record non-current liabilities. So for the non-current liabilities, we have the rights of 10% loan stock. 10% loan stock. So 10% loan stock. So the parent value, is 1,300 plus 1,360 divided by 0.8. Remember that assets and liabilities are translated at closing rate. So 1,300 plus 1,360, you divide 0.8. So this is 3,000. And then we have deferred tax. So the deferred tax is 650 plus 1,268 divided by 0.8. Divide 0.8. So 650 plus 1,268, you divide 0.8. That is 2235. Current liabilities. So current liabilities. For the current liabilities, we have the rights of trade payables. Trade payables being 3,800 plus 1,160, 0.8, then now minus 180. This one, from addition information number 3, credit receivable, debit payable. Debit payable. And remember, it was in Kenyan shillings. So there's no translation which would apply. So that is 50 what? 50 what? I'm getting 50, 70. But there's another adjustment. So this one, let me just leave it for now. Other than this, there's an adjustment which I will be able to adjust here. So let me leave it at this point. There's an additional adjustments to be made. I will be able to clarify which adjustment will be made when I will be doing these workings. So for now, leave this one at this point without getting the total. We continue. Current tax. So current tax is so the current tax is 900 plus 440 divided by 0.8. So 900 plus 440. So that is 1450. So total equity and liabilities. So before I go to the workings, so that I will be able to determine these 4 items: retained earnings, exchange reserve, and controlling interest and trade payables. Let me mention something to you as a student. So far, we have used the 46 minutes to do this question. And remember, I'm explaining to you. That is the first thing you need to know. That when doing any question in financial reporting or this advanced financial reporting, at least you need to use 50 minutes to get 90% of the question. Because we have 5 questions, 360 minutes. 360 divided by 5, that is 40 minutes. So you need to do a question within 40 minutes. Even if you have not done it fully, at least you have scored 90% of the question. So if I look at this question we have done, we have everything. We have scored 100%. Because already, the way they were marking, Goodwill, we got everything. The first part I did. How are they marking this? They were looking for only 7 correct entries. They multiply by 2. You get your 14. Let's check. Are we having more than 7? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. We have 11. So they were looking for 7 correct. You get 14 marks. Plus your 6. You have your 20 within the minute without wasting your time on these things. Without wasting your time on retained earnings, exchange reserve, non-controlling interest. Mostly without wasting your time here. So this one can, this time wasted here as a student, that is, because I will be doing them for me. But as a student, this time wasted here, you could have done other questions. So that is what you need to know. That is what you need to know. John or Wino, are we together? And the others who are following, I can see John or Wino has comment as I dropped a comment. So for the others, you can drop a comment, write the live session, share it to other students, because I know you are in various schools doing these advanced financial reporting. On my case, I do it online. We have classes for the online. We have online classes done. Other than this live I'm doing in YouTube, I do Zoom online classes during the evening hours. The students who have enrolled, like I know in FR we have many students who have enrolled. The same with financial reporting. So how will you be able to enroll? So if you want to join my Zoom online classes, because under the Zoom online classes, we do now more work. We introduce a topic, we do around 4 questions. That way for all the topics. So you just contact me. You have my number, or my number is this one. Have it. If you are interested in joining, you can join. If you are interested in joining, you can join. So you just call me. We do what? We make a deal of what you are supposed to pay. Anyway, there must be a small facilitation fees for the remaining time. So let's finish doing the 3 areas, including payables. So let's finish doing that. So I could drag to clear this. So clearing this, I can be able to find the total value of the assets. So the total assets here is, so that once I do for the other remaining part, it will be able to balance. So the value of total assets because for the assets there is nothing missing. So for the total assets is 27,182.5. So once we'll be able to do the other workings, we'll be able to get for the total equity and liabilities at that value. So let's confirm if we can be able to get that value. Let's confirm. Let us confirm. So looking at our question, there's various work to be done. Already we have done goodwill, which is okay, which was part of the requirement. We have done other work of doing what? Determining revaluation. That is not one. That was the main thing anyway. Under additional information number 1, the main thing we were supposed to determine is that revaluation gain, which we call it fair value uplift, and the other data was assisting us to get goodwill in conjunction with the guidance we have in additional information number 2. So we have to look for the other workings to be done so that we get retained earnings, we get exchange reserve and non-controlling interest. So the first thing I will do is the retranslation of payables. The retranslation of our payables, because that is according to note 3. That is the next additional information. So retranslation. So let's look at additional information number 3, because additional information number 3, they talked about the 180, which was recorded by both entities. However, accounts payable is still recorded at the rate of exchange. So we need to do retranslation because that amount is still recorded at the rate of exchange that prevailed as at the date of the transaction in the financial statement. So the retranslation of accounts payable, the translation of accounts payable of S Limited due to H Limited due to H, that 180, because they said that the accounts payable is still recorded at the rate of exchange that prevail as at the date of the transactions. So what am I supposed to do here? So we have Kenyan shillings. The 180 was in Kenyan shillings. So we need to determine the rate. Then we get what? In krona. Krona. So this transaction took place on 1st October. The goods were exported on 1st October 2022. That is according to note 3. So the credit purchase, 1st October 2023. Credit So the credit purchase which took place in Kenyan shillings is 180, given in note 3. So I want to translate this to krona. So as at 1st October 2023, the rate was 0.9. So to translate from krona to Kenyan shillings, what are you supposed to do? Because you have 0.9 krona is equals to 1 Kenyan shillings. What about 180 Kenyan shillings? So you multiply. So 180 times 0.9, that is 162. So here is 162. So this as at October. So retranslation of accounts payable due to what? To hedge. So as at October, we have 162. What about as at what? As at 30th? As at now the end of the year, 30th September 2023, when our financial year was ending. So the balance which will be attributable to hedge by the end of the year. So balance carry down. So remember that it will be translated at which rate? So 30th September 2023, we have a rate of 0.8. 0.8. So 180 divided by 0.8. That is 180. Remember that it's times 0.8, not divide, because we are changing from Kenyan shillings to krona. So meaning that there's a difference of so from 162 to 144. So that is 18. So the 18, that is our foreign exchange gain. That is again foreign exchange gain on the post-acquisition period. To what? To post-acquisition profit. So the 18. So this is an exchange gain on the retranslation of the accounts payable to S due to hedge. So you are supposed to do that. So this is in krona, and that is what will be able to affect the trade payables. That one would affect the trade payables. So that exchange gain, you would have to deduct here. So the 18, the 18, I would say payables, so that this one would be able to fit here. So the payables, the value is 38 plus 1160 divided by 0.8 minus 180 minus 18. But now this one we have to change what? We have to change it to Kenyan shillings. And that one we have to divide with 0.8, the closing rate. The 18, the exchange gain, must be deducted here. The 18, which is translated at the closing rate. The next thing to be done, the next working to be done is the retranslation of the net assets. Retranslation of the net assets. So let's do the retranslation of the net assets. Retranslation of the net assets. So the retranslation of the net assets. So for the retranslation of net assets, which net asset do we have from the question? So I will have krona. Then we talk about the rate, and we have the Kenyan shillings. That is the case. So the retranslation of the net assets. So we have the opening net assets as at the acquisition date. Opening net assets, and that is as at October 1st. The one which was 2700. 2700 was given in additional information number 1. So remember that we have to translate this at what? At 0.9, the closing rate, not the closing rate, the rate which was there as at October, the date of acquisition, sorry, 0.9. So we get here 3,000. So changing from krona to Kenyan shillings. Changing from krona to Kenyan shillings. So the opening net assets as at acquisition, as at acquisition. So after doing that, we need to check. Remember, there is that 27 which we have translated. So is there any profit during the year? And after during the year, then we check if there's any exchange gain we got by comparing with the balances as at the end. So is there any profit during the year? Is there any profit during the period? So for the profit during the year, how would I be able to determine it? So this is what I will be able to do here to determine profit. So profit for the year, profit for the year, the post-acquisition profit. So how would I be able to get the post-acquisition profit? So I have to look at post-acquisition profit. Post-acquisition profit. That is during the period from October to the end of the year. So the post-acquisition profit, remember the profit as at acquisition, the net asset as acquisition is 2,700. But as at the end of the year, we have a total of, as at the end of the year, the retained earnings is 1442. So we have 2,700 and at the end is 1442. So is it 2,700 and 1442? So we have when we don't have a profit, that is when we use the net asset. But as at acquisition, we were having 540. And as at the end, we have 1442. So remember that when you don't have the retained earnings, that is when you use the net assets. Because when given the net assets only, as at the acquisition date and as at the end. So when you find the post, the difference you are getting is the change in retained profit. Because for the other net assets, the rates of ordinary share capital, share premiums, and reserves, they remain constant. The only thing which changes is the retained earnings. So in this scenario, there was retained earnings. As at acquisition, it's 540. As at the end, as per the balance sheet, it's 1442. Meaning that the post is 1442. 1442 minus 540, which is 902. So 902, that is the first thing to consider. Then now we need to make adjustments to this profit. There was a depreciation. So post-acquisition depreciation, you deduct post-acquisition depreciation. So remember the post-acquisition depreciation is the depreciation undercharge, which was 400 due to the 400, the revaluation gain based on additional information number 1. So times. So the post-acquisition depreciation was? The post-acquisition depreciation was so the post-acquisition depreciation due to revaluation, that is what you need to check in that question. So the post-acquisition depreciation is just it's 400 divided by the 5. The revaluation, the way I've said, the revaluation gain divided by 5. So that is the 80. So remember that the depreciation, which is undercharge, we'll have to reduce this profit. We'll have to reduce this profit because the revaluation was 400 over the useful life of 5 years. So it will have to reduce this profit, the post-acquisition profit. Which other thing do I have to adjust here? You have to add the gain, which we got during the year. Add fair value gain must be added. Fair value gain on retranslation of payable. Remember this again we got when we were retranslating the payables, the 18, eh? So 902 minus 80 plus 18. So that is 840. So the profit for the year is 840. The profit for the year is 840. So you need to add here profit for the year. The profit for the year is 840. You have to translate. You have to translate. So remember that this is an income statement item translated at average rate of 0.75, which is given there. The average rate is given. So if you translate this, one by dividing, you get 1120. You get 1120. So we have started with the opening net assets plus the profits for the year. Then now, what do we have at the end? The closing net assets. So the closing net assets given, or we can be able to, it's given or we determine. So the closing net assets, and with the closing net assets is all about adding 2700 plus 840. So you get 3540. 3540, of which here we have 3000 plus 1120. We have 4120. So meaning that there's an exchange gain of, so if I determine exchange gain, so if now we have closing net assets of 3540. So the closing net assets. So this closing net assets will be translated. Will have to be translated. Will have to be translated. Or I could have done this way for more understanding. I could have done this. If the same thing, if I skip, I will skip one line here, whereby I need to determine if, anyway, what I'm trying to determine is exchange gain or loss on net assets. Exchange gain stroke loss. So exchange gain stroke loss, that is what I'm trying to determine here. So the total which we were getting here for the closing net assets, is all about 2700 plus 840. So we have 3540. And for this one is 3000 plus 1120. So we have 4120. But now, for me to determine the closing, that is not the closing, the exchange gain or loss on the net asset, on the retranslation of net assets. Remember that closing net assets, the closing net assets of 3540 must be translated at the closing rate. And the closing rate as at October is 0.8. 0.8. So if I translate that one, 3540 at the closing rate, so that I will be able to know if there is an exchange gain or loss at the end here, I have to translate this closing net assets at the closing rate. At the closing rate. So dividing with 0.8, I will get 44.25. So 3000 plus 1120, I'm getting 41.20. So 41.20 minus 44.25. There's an exchange gain of 305. There's an exchange gain of 305. This exchange gain of 305, the balancing figure, remember, must be attributable to parent and to what? To NCI. So to parent, 80% of 305 goes to the parent. 20% of the 305 goes to the NCI. So 80% of 305 is 244. And the 20% of 305 is 61. So the parent will be taking 244. So we have the exchange gain from goodwill of 100 and from the net assets of 244, giving us a total of 344. Yeah, exchange reserve is 344. So we are just remaining with retained earnings and non-controlling interest. Retained earnings and the non-controlling interest. So for the retained earnings and the non-controlling interest, so this is just a simple work to be done for those two remaining areas. Because I will come here and say this, for the retained earnings, so we have the parent. So the parent, that is H. So we have to look at H retained earnings. H limited retained earnings. So the retained earnings are as per the statement of financial position. 100% of that is 59. So what will be the parent taking from the other company? So add share of S Limited's earnings. Share of S Limited's earnings. So what H will be earning from? What H will be earning from S? So remember that the profit for the year was 840. The profit for the year in S was this one. This is just profit for the year, which is in krona. So we changed it to what? To Kenyan shillings. We got which value? We got, if we exchange this, we got the value of, so the earnings from S. Remember that we exchanged this 840 to Kenyan shillings because this is in krona. So we exchanged using 0.75, which is the average rate. So 840, you use the 0.75 to exchange that krona to Kenyan shillings. We got 1130. So getting 1130, the parent will be taking 80% of that 1120, not 30, 1120. So 80% of 1120. So that is 896. So that is what you add to 5900. So 5900 plus answer, you are getting 6796. That is what you record here. 6796. Then finally, for the NCI, the non-controlling interest, and we will be done with this presentation of the statement of financial position. So for the non-controlling interest, as acquisition, so they said that as acquisition, that is according to note 2, the fair value of the non-controlling interest was 900 in krona. So 900 converted to Kenyan shillings using the 0.9. So you get 1,000 because it was as at October. So the 900. So that is why I'm translating as at October. I use 0.9. So as acquisition, we have this one, the fair value of NCI of 1,000. Then which adjustment do I have to add? So based on the profit for the year, the 1120. Remember this one? We converted this using 0.75. We got 1120. So 80% is attributable to the parent, 20% to NCI. So add share, NCI share. So you are supposed to say share post acquisition. And NCI share of post acquisition what? NCI share of post acquisition. NCI share of post acquisition. Post acquisition net assets. So 20% of what? 1120. So what is attributable to the NCI there? 20% of 1120. That is 224. 224. Then finally, you add what? Exchange gain. Exchange gain. Remember from goodwill it was 20 plus the one from net assets. The net assets we add 61. You remember the 20 and 61. We were having 100 which was shared to the parent and NCI, and the 305. So if you say 20% of these and the 20% of these, that is what is giving us 20 and 61. The exchange gains based on retranslation of goodwill and the net assets. So this one gives me a value of which that is this one was 125, not 100. So it was 125. So 20% of 125. 20% of 125. This one is 25, not 20. So 25 plus 61. So this is 86. 86. So 1,000 plus 224 plus 86. You get 1310. So 1310, that is what you are going to record there. So let's take if it's balancing. If we have the total assets and the total equity and liabilities being equal. So 5,000 plus 2,000 plus 6796 plus 344 plus 1310. So up to this point we have 15,450 plus 3,000 plus 2235 plus 1450. Remember that we need to determine this plus. So I already by now I have 22,135. So I need to determine these payables. So 3,800 plus 1160 divide 0.8 minus 180 minus 18 divide 0.8. So this is 5047.5. So if I add to the other total value of the assets, which I was getting this value, I would be able to get 27,182.5, which is the same as this. 27,182.5. 27,182.5. 27, not 22. 27,182.5. So that is how you were supposed to do this question number 2. Question 2 from the December 2023 Advanced Financial Analysis, Advanced Financial Reporting and Analysis, CPA Advanced Level, offered by Karsner. So I have shown you the simpler way of getting even the 20 marks. I initially talked about how you can be able to get the 20 marks without even doing the retained earnings, exchange reserve, non-controlling interest. Those three workings, because these are the ones which have consumed a lot of time for us. So I talked about that. So you do the one which you can be able to manage very fast so that you can avoid the wastage of a lot of time. So what I can say is that these other classes I always host through the Zoom platform. These ones are done in the evening hours, and it's for the few who have subscribed or who have paid for. So for you to join, you can reach out. You can reach out so that you can get a lot of information on this paper if you want to make it in the April exams. So you know that this is my number. This is the one you can use to contact me so that we can be able to look at this advanced financial reporting paper, or if you are doing financial reporting and analysis. So ready for this advanced financial reporting RACT. I know already I have uploaded videos on that question too. The one we have already done. That one 20 marks. So I will be able to upload question number 3, even if it's already in my Facebook platform under the same name, Edwin Ochoy. Question 3 is uploaded there under my Facebook account. You can go and check. I have done question 4, the computational part, the share-based. So meaning that the only question remaining here to be done for the last sitting is question 5. And the question may be question number 1. Question 5 and question number 1. And the theory. So those are 2 live sessions we will be done so that we can be able to clear this paper for our sitting. So welcome to my online classes, the Zoom classes which are done during the evening hours. Use the number. You can be able to contact me on so that you can be able to get more information on how to join. Thank you for your time, and make sure that you subscribe to this channel. We are heading to 10,000 subscribers. We are remaining with around 200 subscriptions so that we cross the 10,000 mark. Happy Valentine, and thank you once more for joining this live session. See you tomorrow when I will be doing question number 1C and question number 3C on the same advanced financial reporting, December 2023.